Yo, what's up, everybody? Friday, December 23rd, 2 days to Christmas. Hey, one of the most annoying things in the universe, and I'm sure this has happened to many of you as well. If you do your laundry and you lose socks or a sock, and like even if you're really diligent and paying attention, like how does that happen? I'm sure everybody has had that experience. Like how does that happen? They just disappear, man. And today I lost a pair. I have no idea. How can you lose a pair? I mean, it's crazy. They go into some kind of sock black hole or something. Anyway, so much for these mundane topics. All right, let's talk a little bit about the markets. So today again, we opened and there was selling pressure like there was yesterday, and the market was able to repulse the selling pressure and we closed higher. S&P and Dow recovered about half the loss on the week. NASDAQ was a little bit less, I would say. It probably recovered like about a third of the loss on the week. So we saw some good news today as well on the economic front. You had actually, new home sales shot up to the highest level in 3 months. I'm going to talk about the whole housing situation in a second. And also the personal consumption expenditures deflator. That's supposedly, people always say that's like the favorite inflation indicator of the Fed. I don't know if that's true or not, but you always hear people say that. So that was down. And by the way, more and more, we're starting to see that the whole inflation situation was transitory. So, back in March 2021, when both Yellen and Powell were saying that, I mean, they were correct. But then they got completely, discombobulated by all the talking heads in the media and economists that, this is terrible and it's your money printing and blah, blah, blah and all that stuff. And they reversed course, and Powell, of course, we know what happened. He went on this insane Volcker-style, rate hike blitzkrieg. And the irony of all, which was totally unnecessary, it unnerved the markets, it made investors crazy, and we're still in this kind of environment where the monetarists are completely freaked out and spooked by anything that could suggest, more Fed rate hikes. Even they could be, as I've been pointing out, like positive economic data, like things are getting better. And it's like, no, we got to sell. So, I mean, this is just bad management. I mean, you have to have an ability to resist like hysteria. I'm sorry, but like if you're in a position like you're running a monopoly, the Fed, and you're in a position to have that kind of control over certain aspects, I mean, you have to have some emotional stability. You can't be flip-flopping around. And I think Powell, maybe more than any other Fed chairperson, has just shown a very high level of emotional instability. Like there's been a number of times I can recall where he's just flip-flopped and caved into whatever the market or Wall Street or the economists or the media demand. And that's bad. I mean, that's just bad. I've given the analogy in the past, like, can you imagine somebody like John D. Rockefeller, the founder of Standard Oil, the monopoly back in the late 19th and early 20th century? Can you imagine if he went around to all his little competitors and asked them, like, what price should I price my oil? No, he crushed them. He put them out of business. He was like, give me your companies and I'll give you some stock. Not even like really sell me your companies. Here, I'm going to give you some stock. You either hand over your assets or I'm going to crush you. I'm going to put you out of business. That's what a monopoly does. That's the power of a monopoly. But this guy, no, he's really, really bad. Anyway, we're seeing now how the whole thing was transitory, and it was completely and totally linked to the supply chain issues, which is what I've been saying all along. But anyway, that's neither here nor there at this point. And the big irony in all this, and of course you guys know this, is that the Fed rate hikes, that'll keep inflation higher than it would have been if they just sat there and kept it, where it was. I mean, every time and they're still raising rates. So every time they raise rates, they're just raising the general price level, and it impedes the process. It doesn't allow inflation to come down as much as it should, because you're just raising the general price level. And the other thing is, that's a big fiscal expansion, as I've been saying. I mean, that's just going to translate, and it has been translating into higher and higher interest income transfers into the economy. So there you go. Hey, today, the 1.7 trillion omnibus spending bill got passed. It was passed yesterday by the Senate. It was passed today in the House. There was a little bit of a question mark on whether or not it could get through the House. It did. So it went to Biden. He's going to sign it. So that at least, we're going to get off these continuing resolutions, and we have a full funded government until the end of September 2023. And the new spending bill includes a bunch of new spending. All right, there's money for the military, of course. There's money for Ukraine and Zelensky, of course. I don't know what else is in there, but those two entities are getting big increases. So we have that. And then next year in January, we're going to get a big increase in Social Security benefits. That's automatic, okay? And anything else that is subject to cost of living increases, that's going to get an increase too. So like I've been saying, 2023, I'm the only guy, the only economist out there who's saying, and I gave you a 95%, I'll even say 97% chance that there's not going to be a recession, even though the vast majority of economists right now are saying there's absolutely going to be a recession in 2023. And I'm saying there's not, because they just don't understand the full picture. I mean, everything is, oh my God, interest rates. Oh my God, interest rates, they're going up. I mean, folks, it's a two-way street, as I've been trying to explain. These fiscal transfers, like, I have not heard one single person talk about this. And I give you actual numbers. Okay, I didn't look at the numbers like today, but, we're almost 60 billion. We're probably more than that now. 60 billion in the first 2.5 months of the fiscal year. I mean, come on. That's a huge fiscal stimulus. So anyway, you got that going on. So that 1.7, that was 1.7 trillion omnibus. So we don't have to worry about that. But we still have to worry about the debt ceiling, because that was not included in this package. And that's going to be, a fight that we'll have to see how that plays out next year. I can tell you this right now, that right now, looking at the Treasury's account at the Fed, there's about 430 billion in there. That's probably good for about another 2 months, maybe a little bit more, okay? And then Treasury could run on what they call extraordinary measures. That's, when Treasury, they basically don't make deposits into like government retiree pension funds or something like that. So maybe run another month, another 6 weeks after that. So let me say, I think we're okay through the first quarter of 2023, at least with respect to the impact, or the how the debt ceiling may impact the economy. After that, after the first quarter, if they don't raise it, then we could have some problems, because then we go into a situation where the fiscal flows are really cut back. And then, like I said, that's my 5% or my 3% probability of a recession. If they don't raise it, and it goes all the way into whatever April, then that's it. I mean, the economy is going to contract, because don't forget, April is tax month. So I mean, March is tax month, corporate quarterly tax month. That's why I say, I think we're good till mid-February, early March, and then maybe you want to take some profits. So that's the outlook through then. What else is going on? Oil, I think right now in that period, by the way, in this period that we're going to see this fiscal expansion and we're through, we got past the last week's quarterly tax drain. I think that now it's a positive environment for commodities and precious metals. I think it's a negative environment for the dollar. I'm actually short the dollar right now. And I think that's going to be the trend going into, like I said, late February, early March. And then if you want to play the reversal in that, I think that's the way to go about doing it. Other than that, we had a negative week. I mean, this mentality is still going to be in effect. And by that, I mean the mentality that good economic growth is going to trigger selling by the monetarists. I mean, that's the way they perceive it right now, and that's going to be the behavior. You just have to get used to that. And like I said yesterday, this uptrend is going to be a grind. It's going to be a grind because you're moving against this kind of tidal wave of belief or expectation that is going to trigger behavior that's going to keep the market always kind of like on the defensive. But you got to go against that. You have to go against that. Economic activity is improving. You're getting a major fiscal expansion. We have the 1.7 trillion now omnibus budget, so we're finally off these continuing resolutions, which, by the way, the continuing resolutions, they just kept spending at prior levels. This boosts it up, like I said earlier. So I think it looks good. I think it looks okay. It's not to say we won't get these headline events. You're going to get these headline events, but like I said yesterday, if you want to go with that, you can go with that, but I don't see that as a very worthwhile strategy. That's a highly emotional lack of understanding. You're going with the crowd. I just don't see that as a viable strategy. I'm not saying if you don't do it if that's what you want to do, but I don't see that as a viable strategy. I think you got to look past that. I think you have to see the big picture. If you see the big picture, it's like I said once before, navigation. Think about it. You're on the open ocean. There are no landmarks. You see a squall. You see something in the distance, off in the distance, some weather developing. You change course. Then some other weather developing in that direction. You change course again. Pretty soon you lose where you're going. You're not going in. You're basically not going anywhere. You're just, you're sailing in a kind of a random fashion. You get out your GPS or you get out your sextant or your maps or whatever it is you use to calculate your position and to determine where you want to go. And you stay the course. And yeah, you're going to run into a squall. Maybe you want to navigate around it, but you still understand, this is where I want to go. You don't change willy-nilly, one day over here, the next day over here. I mean, we saw that a few weeks ago. They're buying, they're selling, they're buying, they're selling. And I guarantee you that's going to continue. That's the nature of behavior for most people. And I say this to impress upon you that that's handing you an opportunity. If that's the behavior of most people, then ostensibly this whole business of investing should be relatively easy. I mean, you want to go against that behavior. You know, you just need a little patience and a little discipline. Again, coming back to the navigation metaphor, I mean, you don't see the land, you don't see where you're going, but you know by the charts and by, you know, whatever you use to navigate, you're going in the right direction. A compass, whatever. If you're in the woods, if you've ever done any hiking, which I have, I've done a lot and I like hiking, learn how to use a compass. Some of you don't know this, but I'm actually a scuba diving instructor. I got certified as an instructor all the way back in 1977. I don't teach actively, but I maintain my certification. And as part of the certification, of course, we had, you know, open water dives, we had swimming tests, we had all kinds of things. But then we had to do like a mock classroom, all right? And I remember and everybody was handed a piece of equipment, and you had to give, you know, like present a little, not a course, but just kind of like an explanation of your equipment, of how to use it, all right? And I was presented with a compass, believe it or not. Probably one of the easiest, because you could have had a regulator, you could have had a buoyancy device, you could have had, you know, your scuba tanks, you could have had a mask, you could have had a snorkel, you could have had a million different things, a wetsuit. The instructor, the head guy, he gave me a compass and he's like, okay, you explain that. And like when you're underwater, especially like we used to dive. I lived out in California for a while in San Diego, and then we used to dive off the beach and swim out like way, way out. I got stories to tell about that, crazy stories, but like, you know, and you could lose your sense of bearing. Like you're out there, we used to go out and we used to go diving for abalone or lobster or something like that, and we'd swim off the beach, and then, you know, we'd be out there for a while. Could be out there for like 40 minutes, an hour. We're underwater, so you don't see landmarks underwater, but you have your compass. You have to know how to set that compass, you know, prior to getting into the water. It's a very easy thing to do. You face the water, and then you turn the dial on the compass to the direction you want to be in, and you put that on your wrist or wherever, and you swim out, and then on the way back, you just follow where that compass is saying. But it's very important, because if you didn't do that, you know, you could be swimming in a completely wrong direction. You could be swimming farther away from shore. You could run out of air, and then you're screwed, right? So I remember this very, very, like it was yesterday, this lesson. It was a lesson that I had to give in front of the class, like a mock lesson on how to use the compass. So, and when I hike, because the woods are the same thing, like here I live in the Northeast, so, you know, sometimes we go hiking here, like New York State, there's a lot. We're up in the Catskills, or, you know, in the summer, maybe I go up in the Adirondacks, or even close by here, we have some nice state parks. And, you know, it's the Northeast, so these are forests. So you get into the forest and everything kind of looks the same, even though the trails are pretty well marked, but sometimes I like going off trail. And it starts to look all the same after a while. You need to know how to get back onto the trail. So you got to rely on that compass. The cool thing is, like, the phones nowadays, they all have compasses built in. But I have, you know, I have a, like a regular compass, you know, that's magnetic, which I carry with me. Anyway, I kind of deviated from what I'm, but you guys understand what I'm saying. I mean, you gotta stay the course. You can't flip-flop around. You got to stay the course. And unless, you know, if I see, and I'll be very frank with you right now, you know, if I see a deterioration in the flows, if we get into next year and you know, there's no increase in the debt ceiling, or even before that, if I really start to see a deceleration in the flows, which I don't think is going to happen because they just passed this spending bill. I mean, I'll tell you, you know, we're going down. We're going down. And we're going down in a trend-like fashion, not just like headline, you know, one day down, one day up. No, you know, we're going down because the economy is going to contract. But right now, again, I do not see that. So anyway, That's it for today. Tomorrow's Christmas Eve. What do you guys do on Christmas Eve? Do you watch a favorite movie? I have a tradition. It might sound really, really old-fashioned. First of all, I'm gonna make like one of these Italian dinners, like the 7 fishes. Not all 7. But I'm going to make some baked clams. I'm going to make some linguine and something. I don't know what. But I have a tradition. It's going to sound old-fashioned. I don't know. But I watch the movie It's a Wonderful Life with Jimmy Stewart every year on Christmas Eve here in the United States on NBC Network at 8 p.m. Eastern Time. I don't know wherever you're located, it might be a different time, but that movie is on, and I love that movie. I just think it's a wonderful, fantastic movie. You know, I think it was done like in 1940 something, 46, 47, 48, something like that. So it's kind of like goofy, but I like that movie. I watch that movie every year religiously on Christmas Eve. I don't know what you guys do. Let me know in the comments, all right? And yeah, maybe I'll make a video tomorrow. Wish everybody a Merry Christmas and a Happy Holidays and Happy Hanukkah to all my Jewish friends. All right, everybody, that's it. Don't forget, I'm the only one who has an applied approach to MMT. Nobody else does this. Like, I'm giving you special stuff here. Go to my website, pitbulleconomics.com, sign up for a 30-day free trial. There's a lot more stuff in that subscription than me just talking here on this video. Bye, everyone.